You're listening to the Millionacres Podcast. Our mission at Millionacres is to educate and empower investors to make great decisions and achieve real estate investing success. We provide regular content and perspective for everyone, from those just starting out to seasoned pros with decades of experience. At Millionacres, we work every day to help you demystify real estate investing and build real wealth.
Hello, I'm Deidre Woolard, an editor at Millionacres, and thank you so much for tuning into the Millionacres Podcast. In 2019, industrial real estate was the hottest sector in commercial real estate. Then along came 2020, and industrial real estate became even more valuable as e-commerce soared. There's just so many factors now that make industrial real estate such an attractive sector, and we're going to dive into all of them with Peter Lewis of Wharton Equity. Peter Lewis is chairman, president, and founder of Wharton Equity. Since its inception in 1987, he's overseen the expansion of the firm's investment reach across different asset classes and strategies. Welcome, Peter.
Hey, thank you. Happy to be here.
Well, I'm excited to talk to you today. I want to get into the deeper stuff pretty quickly, but let's just start with an explainer of what exactly is industrial real estate and why is it so hot right now?
Okay. Well, industrial real estate historically has always kind of been the unwanted child in the real estate business. Usually kind of in the darker, kind of undesirable parts of town. Historically, more manufacturing oriented. But industrial in general is where products are produced, stored, and distributed. What's so fascinating right now, and I've been doing this for 30 years, is the complete transformation of a sector overnight. I mean, I saw this coming in 2016, 2015, and that was why we made our big push into the business. But what COVID has done is really highlight the new world of industrial. And today, what you're seeing is the building of large fulfillment centers, the repurposing of old, tired industrial buildings, all to service the burgeoning e-commerce economy. So we are at the doorsteps of such an exciting time, and I'm really thrilled to kind of explore this with you today.
Well, let's talk about the whale in the space, which is Amazon. Amazon they're buying, they're leasing, they're just grabbing space left and right. What does that mean for other tenants? Are some smaller tenants getting squeezed out?
Absolutely. We are watching in real time Amazon build out an infrastructure, particularly around the major cities to start with. Eventually, they're going to go into all the other markets, and they are already. But their real big push right now is to dominate the major population centers, and they're doing that at an unbelievable pace. We've been the beneficiary, if you will, of a couple of transactions where we leased our buildings to Amazon. But what's going to happen here is that they are crowding out other users. And so you have this kind of perfect storm of events, which is Amazon consuming a lot of real estate, new companies and old companies that are moving into what's called omni-channel. So they're actually starting to increase their online presence in addition to, let's say, bricks and mortar. So you have this rising demand, and you have limited supply in a lot of markets. So this kind of fulcrum of events is putting enormous pressure on occupancies, and now we're starting to see rents really start to move. But I would argue that we are in the first or second inning of this whole transformation. And while Amazon is surely the name everyone talks about, there are a number of players that are also trying to crowd their way in. But there's no one so exceptionally focused and sophisticated as Amazon. We are watching the birth of a creature that this world has never seen before.
Absolutely. So you just mentioned rents. Industrial traditionally doesn't have a very high price per square footage number. That seems to be changing, right? Is industrial going up?
Oh my God, it's unbelievable what's happened. Even in the last 90 to 120 days. I've told my team that you will remember my comments, but from Boston down to DC, which is the markets that we like to focus on also in Florida, but within the next few years, the concept of single-digit rents, which has been the way since the beginning of time, they will be gone. And I would argue that in many markets, particularly northern New Jersey and some of the really high-profile markets, I think you're going to see industrial rents eclipse office rents. And remember something else, Deirdre, which is important to point out. Even though they're moving at a very fast pace, rents in general represent somewhere around 5% of the total supply chain costs for a typical large retailer. So they're not a huge cost like labor and transportation. So they're able, they don't want to, but they're able to absorb this increase up to a certain point. But we're nowhere near the inflection point of where that's going to be.
Well, I think part of this, one of the things I've been studying with retail real estate is the movement to like buy online, pick up in store, and the need for last mile warehousing. Is that part of also what's driving up the pricing?
I think it's just an overall demand for people to get goods as quickly as possible. I think that's what you're saying. But even large fulfillment centers outside of this, where they're shipping directly to consumers. The land around Atlanta and other markets like that are also starting to rise. Rents are starting to move. So it's not just the last mile, which is clearly suffering greatly because of the shortage of product. But also you're starting to see around the areas that are major distribution hubs that have big boxes, land costs are rising. Plus, let's not forget, coming out of this pandemic in particular, construction costs are on a horrific run right now. So you're seeing these events come together: demand, rising costs, scarcity of land. All of these are going to form into one thing, which is there's only one direction for rents, and that's continuing to move up. But surely there's a premium today, and a continuing premium on being close to major populations because people got spoiled by Amazon a few years back. I remember very distinctly when they moved from 2-day to 1-day, I knew instantly that one move changed the world. It was enough that they did 2-day, caught everyone off guard. But when they went to 1-day, the only way you can get product in people's hands in 1 day is you need to be next to them. You can't manufacture these things in people's houses. So the second they made that decision, all warehouses close to the major cities became 50% more valuable. But ironically, a lot of those owners weren't aware of it at the time.
Interesting. Yeah, quite an opportunity. So there's a report that came out from JLL a few months back that I've been quoting that said industrial real estate demand is set to grow to 1 billion square feet by 2025. I think once you say billion, everybody perks up. Are we building enough? Or do we need to be building more industrial space?
We're not building enough, and we can't build enough. Here's what's going to this is what's going to change, and why industrial is so fascinating to me in particular. As driverless vehicles come into play, and they will over the next 5 to 10 years, what that will do is we'll open up a new paradigm to build super regional distribution centers further away from the cities. So trucks can go unmanned, for example, at 3 a.m. to a distribution facility closer to the population. But the biggest problem we're going to have is the availability of land, and also what's happening in real time. You see it in Lehigh Valley and some of these other markets, tremendous resentment and resistance to development by neighbors and residents. So while I think 1 billion is low, and I'll get into why I think that is, we're not even going to be able to keep up with the pace because supply is going to be constrained, and that's the biggest threat, I think. Versus, are we building enough? Whatever we build is going to be absorbed. I just don't know if we're going to be able to build enough.
What about adaptive reuse? I mean, we're seeing some like malls that are being part of the mall, or the whole mall is being converted into a fulfillment center. Is that going to be part of the story as well?
I'm not so sure retail is going to be a major force in satisfying demand. And one of the big reasons is if you really think about your local mall in the areas that are heavily populated, and I'm not talking about, let's say, the center of the country and some rural markets, these are usually surrounded by residential. There's tremendous resistance to trucks rolling through neighborhoods. So I think there's going to be a lot of pressure on thwarting that kind of change. I think it'll happen sporadically. But what I think is actually probably more interesting, and something which we recently did, was we turned a almost 300,000 square foot subway repair facility in Philadelphia into a last mile distribution facility. We ripped out rail lines inside the building. We completely changed the building, which was built in the early 60s, that used to service all the subway cars for SEPTA, which is a transit system in Philadelphia. And we were fortunate, I alluded to this before, but Amazon wound up leasing the whole building from us for last mile distribution. And fascinatingly, because I got a chance to watch, got a bird's eye view, the goods come in the night before or during the day, and they're out within hours. They don't store them there. It's just a place for staging so that the drivers can take the goods and get them into people's houses. So I think repurposing probably more kind of manufacturing buildings and older buildings like that will be more beneficial. But again, in my opinion, that can't in any way satisfy the demand that's coming.
What about vertical warehouses? I know that's a bigger thing in Asia and in Europe. Is that coming here too?
Well, you're seeing it starting to pop up in New York, and some guys have had some early successes, mostly Amazon. I'm not convinced yet that the math works, and particularly today with the cost of construction. I mean, think about when you think about a multi-story industrial building, we're dealing with multi-layers of parking and ramps. Just the concrete alone is enormously expensive. And then you have to add the steel, the rebar. So I'm not sure yet whether or not the math works, i.e. you can get enough rent. So I think it's a curiosity right now. I don't know yet if we're at that stage where it's such a desperate situation where people, tenants will pay the rents to justify this kind of construction. So the verdict's still out in my mind.
Interesting. You mentioned Florida earlier. A big part of last year, everyone's talking about the Sun Belt. That's more of a long tail trend. It's something we've been following for years. Is that impacting where you're looking for opportunities? Are you focused now more on the Sun Belt just because so many people are moving there?
We've always been interested in Florida and the Sun Belt. We used to be a very large owner of multifamily. It was all down in the Southeast. We're building large, big boxes in the Southeast. We are tremendous bulls on Florida. Florida is a really fascinating place because of the constraints you have with the Everglades and the ocean. So Florida is getting built out into one big distribution hub. We built a 600,000 square foot spec warehouse in an area called Ocala, which is in Central Florida, which was pioneering. This was a few years ago. People were questioning why we did that. But we saw the network of roads and population, and biggest thing was labor. And we were fortunate, again, coincidentally, to lease that to Amazon because they saw the same thing. So I love these areas that are growing. But for us still, our primary focus is where the densest population exists, and that's on the East Coast. Even if people are moving out of New Jersey, it's still 1/3 of the U.S.'s population resides on the East Coast, and that's where retailers need to be. That's where distributors need to be. So we're really working hard from the Boston to D.C. corridor, then Central Florida, South Florida, and then sporadically through the Southeast.
Interesting. One of the things that I heard recently was that the shipping ports on the East Coast are getting bigger, getting more things coming in. Traditionally, it's, the Southern California Long Beach port is one of the biggest, but now you have the port in Jacksonville. Is that also impacting industrial real estate right now?
Absolutely. I'm so fascinated with the different modes of transportation. For sure, ports like Savannah are booming. Jacksonville is starting to emerge. But I even like these secondary ports. Tampa has a port, and they're very hard to get approved and very hard to build out. So what you're going to see, I think, is continued growth in the major ports. Obviously Miami, obviously New Jersey, surely Long Beach. But keep a close eye on these secondary ports as they start becoming viable alternatives to the big ports as their fees rise and congestion occurs in those ports. So water transportation is going to be continually important, obviously, as goods come from abroad. And ports are going to play an even bigger role in the years ahead.
Well, it sounds like there's practically no bad place to build industrial right now. How hard is it to find a good industrial deal right now? Are the cap rates changing? Is it just getting tougher and tougher to find anything?
This is not atypical when something starts becoming in vogue, and I'll call industrial in vogue right now. People run to the obvious spots. So northern New Jersey, I can list the locations where most of the money is looking. What we've always done as an investor over 30 years is try to anticipate where's the next area, like we did with Ocala. But even like in Philadelphia, the building we bought down there, the entire real estate community passed on that building. They just couldn't see what it was going to be. So my job as a leader of my firm is to try to steer us into markets and property related types that people aren't focused on, because the obvious is starting to get overbid and too frothy, in my opinion. So markets like Connecticut, markets like Delaware, these old industrial buildings where you have to really work hard to change them, things like that are the places that I like. And then we love infill kind of development, although they have their challenges, as I mentioned before, with respect to zoning and some resistance from neighbors. But again, today I think you need to move quicker, you need to be smarter, and you need to have the belief that someone in central Connecticut wants their goods in a day as well as the person sitting in New York City. And guys like Amazon and others are determined to make sure that everyone in the country will have goods in their hands within a day, if not sooner. That's why I think we're early still in this whole game. But for us, again, the areas that we're focused on are not the obvious ones. They're the kind of the secondary obvious, if you will.
Interesting, because I feel like there's an opportunity. You mentioned industrial. There's a lot of buildings that maybe need remediation or something like that are maybe too big a challenge for some investors to take on.
Absolutely. And by the way, here's a really fascinating, I think, opportunity. I don't want to give all my secrets away today, but there are old industrial cities that were abandoned and along the East Coast, and they've fallen into decay over the years, struggling with real estate taxes, struggling with keeping a population. However, they're located on major highways. And what you're now starting to see is the mayors and the governments of these towns are opening their ideas and their minds to the possibility of bringing industrial into their fold. Good paying jobs, vibrancy as far as opening up retail in downtowns. So I think another opportunity going forward is going to be the rejuvenation of some of these formerly manufacturing cities. And that's a win-win, because it's going to rejuvenate these cities, and it's also great for the retailers. I'm using Amazon just generally, but it's goodwill, where they're going to be able to lift the population up that may have been a little downtrodden because of the historical circumstances. So I'm really excited about that possibility.
I find that really fascinating. I was talking to someone who is based in Cincinnati, and they were talking about the impact of Amazon on the area around there too, because it's near a major airport.
Absolutely.
All right, let's take a quick break here.
Like what you're hearing? Get more real estate investing news and advice from Millionacres on Instagram @Millionacres and on Twitter @Millionacres_co.
Institutional quality real estate deals used to be reserved for the 1%. Not anymore. Get unparalleled access to the country's best real estate investment opportunities with CrowdStreet, the leading online real estate investment platform for accredited investors. CrowdStreet's latest offering is an upscale Hilton in South Lake Town Square, a luxury live-work-play complex in Dallas. This market is regularly ranked as one of 2021's best places for investment. The project is in proximity to the DFW airport, a number of Fortune 500 headquarters, and attractions like AT&T Stadium, Globe Life Field, and Dallas Motor Speedway, all feeding reservations to this premier investment opportunity. Whether you're brand new to real estate or seasoned, CrowdStreet's industry-leading deal flow, in-depth educational resources, and expert team make it possible to find the right building blocks for your portfolio. Since 2014, the CrowdStreet community has invested in more than 490 commercial real estate investment deals. Join thousands of accredited investors like us using CrowdStreet to diversify their portfolios. Find the right project for you and become a passive investor. You don't need to change light bulbs or answer midnight maintenance calls to be a real estate investor on CrowdStreet. Register for free now to see current deals in the marketplace and build your portfolio at crowdstreet.com. CrowdStreet is not a broker-dealer, registered investment advisor, or crowdfunding portal. Past performance does not guarantee future results.
I'm back with Peter Lewis of Wharton Equity, and we're talking all things industrial real estate. So before the break, we talked about smaller cities maybe that will be getting industrial, and that's good from a jobs perspective. But here's the thing. I'm really fascinated by the idea of robotics and AI changing warehouse space. Are there going to be fewer jobs in industrial going forward?
We are at the dawn of a change. And this is not different, by the way, than the change from, let's say, horses to automobiles, or the beginning of the Industrial Revolution. Every so often, these sea changes emerge that change the configuration of the employment base. We're in that stage now. I believe over the next 5 years, you're going to see an enormous amount of automation climb into the industrial business inside these facilities. Driving that, ironically, in some regards, COVID opened the idea up to many employers saying, oh my God, I'm beholden to human beings who can get sick or have other reasons why they can't go to work. Plus, layer on top of that rising labor costs. So what's accelerating now, and then let's not forget, obviously, the most important of all is that they're more efficient. So robotics inside facilities is absolutely happening. And I believe over the next number of years, all routine jobs, not only in industrial, but in other places, are going to be moving more towards automation. So we're going to be finding a period of time where people are going to get displaced. And they're going to have to get re-educated into the new world that we're in, which may be learning how to deal with technology that's required to run these robots, repairs of these robots. So I think in some way it's going to be healthy, but there's going to be some pain between now and then. But make no doubt about it, AI, in particular AI, machine learning, is changing the way we are living. And some have cited AI and machine learning as a bigger potential change to our world than the internet. And I do believe that over the next 10 years, we're going to see remarkable change because of what's happening with kind of computing power and learning.
Yeah, I agree with that. And especially so much of industrial space is just space. There's not really, there's a lot of opportunity there. But on the flip side, I've also seen some industrial real estate properties, new developments that include things like more amenities for workers, sort of a less kind of what you'd think of as traditional industrial and looking kind of more like an office space. Is that something that you've seen as well?
Yes, I have. And here's the reason. First of all, again, it's just a change in mentality. I think people are becoming more socially conscious, rightfully so. But also, the biggest problem today with industrial, particularly fulfillment centers, is they can't find people. So to lure, ironically, people to their facilities, besides pay, they want to show, hey, look at us. We have barbecue stations. We have lactation rooms. We have all sorts of amenities which makes your life more exciting and interesting. And we're treating you more like real people versus kind of slave labor, which is, going back a long ways. But so I think that they're going to continue to need to provide the amenities selfishly, number one, because they need to get labor, and then two, obviously, they're looking to be good corporate citizens. But there's an irony in this, as you know, which we just discussed, what happens now as these jobs become more obsolete because of the introduction of automation. So in a perverse way, you're going to see many facilities over the next number of years be these gorgeous, fantastic with gyms and all these things. But as far as I remember, I don't think robots actually going to go in and lift weights. So it may be built out for the short term, but I'm not sure long term is going to make a difference.
Does a facility like that become more palatable for the local government because it looks less like a big, ugly industrial building?
Now, the size of the buildings are obviously problematic, but what really drives people crazy is just the trucks. even if they're electric and they're not quote unquote polluting, it's just the enormity of them driving through the local infrastructure, with lights at night in their living rooms. Danger obviously with kids running around. So surely the scale of these buildings. I mean, if you've driven through Lehigh Valley, which is really a very fascinating case study, you have the example of these monster boxes next to a $500,000 subdivision, and because it evolved so quickly. But I think what's happening now out there, for example, is that other communities, which are just starting to get impacted by development, are looking at these other places and saying, I don't want to be like them. So you're seeing them really resist, the development. So, it's so fascinating because, again, it's all happening as we're speaking.
Interesting. What does that mean in terms of tax incentives as well? Are some areas actually, some of the ones you described that, need that kind of development, are they providing tax incentives at the same time that other places are saying, no, we don't want this in our neighborhood?
Yeah. Fascinating. It's a great question. I think you're going to see more and more southern cities and states like Kentucky, like Tennessee, like Georgia, embrace these companies from the north that are looking for better quality of life, cheaper labor, more land, more affordability in general. So those states are actually very vital right now, for example, in the automobile industry, in like Greenville, which is an area that we've been building in, which is the home of BMW's major production facility. There's a whole industry that's grown up around servicing BMW, which is a lot of warehouses. So you're going to, and what started that was incentives. So, and then ironically also, states like New York, states like New Jersey are stressed financially. So they can't necessarily offer the same kind of incentives, let's say, of some of the other states. So this is a real threat, I think, to large companies in the Northeast and some of the other kind of urban markets. And I think you're going to continue to see that trend in the future.
Let's pivot a bit and talk about some of your tech investments, because your company was an early investor in Latch, which is going public via SPAC. It's one of our favorites at Millionacres. Now I saw that they're getting into office spaces as well as multifamily, which just seems so smart. Could you share a little bit about Latch and why did it attract your attention early on?
Well, look, we are at heart, going back to the beginning of my company, residential developers. So I knew the second I saw the product that I knew the need and I knew the opportunity. Our venture business, which is really a kind of an outgrowth of our 30 plus years of being real estate developers, is focused on technologies that are changing legacy industries, and locks are perfect. I mean, locks go back to like prehistoric times. And they really haven't changed much over the last 100, 200 years. When we saw the product and we knew the functionality of what Luke and his team at Latch were doing, we knew instantaneously that this could be a really big business inside a very big industry. So again, we try to look at opportunities that are servicing multi-billion-dollar markets. So what we loved about Latch is it was trying to change an industry that was still stuck in its old ways. The product is beautiful, the technology is functional, the team is fantastic, and Luke also was really terrific in how he went about bringing investors into the company. He strategically aligned himself with developers and investors like us so that we could use his product and also encourage others to do that. And hence, the SPAC that they're doing now with Tishman Speyer is perfect. Tishman Speyer is going to be a big consumer of the product, and also at the same time they're going to benefit Tishman Speyer for being an owner of Latch. I think this kind of merger of real estate, business, technology is going to continue, and we are very, very focused on that aspect of investing in the future. We see a day, and we're working on a number of deals right now, where we're working with companies that, let's say, are space constrained. They need more real estate to grow their business because they're booming. We're working with them where we're saying, look, Why don't we work together? We'll build out more facilities for you guys. You can anchor the facility. You don't have to take all the space. In exchange for that, we want to be an investor in your company. So we almost have a self-fulfilling prophecy here of them getting bigger and better because we're providing the real estate. At the same time, we're benefiting because we own a piece of the business. And so I see this fusion continuing across the board in the future. And it's a place that we're really, really heavily focused on with respect to our venture investing.
That's really smart. Well, let's talk about another one. You were an early investor in Dataminer, which just raised $475 million this spring. Not as well known as Latch. So can you explain what it does and how data is changing industrial real estate?
The two kind of areas, I mentioned one on the philosophy of our firm as far as our investing on the venture side is how do you enhance a product in an industry that may be still kind of stuck in the old ways, a la Latch. The other area, which is a very lucrative area, which is harder, by the way, is reinventing a completely new industry. So when the Dataminer idea came to the firm, this was in 2011, you knew that the pace of the generation of data was just starting. And by the way, we're still just starting. So as more and more people have cell phones, as bandwidth continues to increase, we're going to see more and more billions of pieces of data that's going to circulate. And we believed at the time, and we've been fortunate, that if you could somehow harness all that information and make sense of it through machine learning and artificial intelligence, it is incredibly valuable for stock traders, which is what they started out as. But today, their biggest customer is the military, who must know in real time everything that's going on around the world. So this movement towards knowing things instantaneously is incredibly valuable, but it didn't exist 20 years ago because we didn't need it. So we've been really, really thrilled with our investment in Dataminer. We're one of the top 10 largest shareholders in that company. And as you mentioned, they raised a bunch of money recently at a $4 billion valuation. And we're constantly on the lookout for new ideas like that.
It's a trite saying, but people say like data is the new oil. And I think that's something that's happening to real estate dramatically, certainly the last year or so. Anyone who could do things not in person sort of ended up figuring out how to do it, whether it was valuing a property or touring a property. I'm really fascinated by digital twins and the potential there. So outside of industrial real estate, what else are you looking at right now in terms of sectors or technology or anything like that?
The real estate business is going through an interesting change because of COVID. It's highlighted a lot, but some of these are going to be permanent and some of these are going to be transient. In my opinion, the concept of a majority of people continuing to work at home is going to be unrealistic over the next few years. I think probably within 2 years, we will be back to levels that we saw pre-pandemic as far as people working in offices. They don't want to miss out, number one. Number two, companies are fully invested in making sure that their teams are together. It's a much more important environment to learn and to mentor. So I think the death of office is way overstated. And so we actually are looking at boutique office, let's say suburban boutique office, which is actually going to be outfitted for more flexible type of leases. I do think something that's going to stick is the movement away from locking up long-term leases, unless you're big companies. But for the smaller guys, I think they're going to be looking for shorter-term leases, more flexibility to expand and contract, and not have these long-term obligations. So we like boutique office. I really love boutique hotels, only though focus more on the leisure travelers. I think the big conventional hotels are going to struggle for a while. I'm not sure they're ever going to fully get back. And those kind of hotels are going to have to figure out a way to repurpose all that meeting space. But people are, I think during COVID, they found that there's other things in life besides work. And I think that's going to be something that's going to be ingrained in our society going forward. And so I think travel and staying at really nice places is going to be an important thing in our society, and we like hotels in that regard. Interestingly enough, in self-storage, again, as we look at our real estate business, people are buying more and more stuff. How many times have you bought something? It happens to me, but I bought it. I forgot what it was when it came to my house, and only when I opened it up, oh yeah, I remember I just bought that. Now, many times it's obviously things I need, but you're continuing to pile more stuff in. I think that's really good for self-storage in the years ahead, and also as we move to a renting society in many ways, and which is more transient. That's also beneficial for self-storage. And then the last asset class within real estate that we're looking at right now, parking lots. We think that they're interesting places. They're going to be repurposed in the future. How is a parking lot going to exist when the world becomes autonomous vehicles? I think they're going to be redevelopment sites. How are urban parking lots going to, what are those going to be? I think they're going to become micro-fulfillment centers. So we're looking at product in real estate today that is not going to be what it's going to be in the future, and trying to buy it on a basis today that makes sense and have the optionality in the future on a reuse to really hopefully make a lot of money. And then on the technology front, one of the beautiful things of industrial, it gives us a really unique perspective into the digital world. I mean, we're seeing firsthand companies like Wayfair that started, they're an internet-based retailer, as you know. They may have one store now, or they're working on a store, but largely they grew up just being, online. So when we hear that they're looking for more space, or these guys are looking for more space, their businesses are booming. So we have a bird's eye view. We're looking at companies like there's a company called GoPuff, which is almost like a dark convenience store located next to universities that deliver goods to college students within a couple of hours. That company is booming, and we know them because they're based out in Philly, and we heard they were out looking for more space. And then we're looking at robotics companies, well-known company, which I don't want to mention, that we're studying very closely. They're outfitting warehouses next to major cities, and they're growing like crazy. So we're very focused on all things e-commerce and the technology that continues to enable our transformation into a digital world, particularly around how goods are bought. And we're just, again, think about the world ahead of us. As 5G continues to infiltrate and the pipes, if you will, broaden, virtual reality is going to become more and more important. You're going to be able to walk down Bloomingdale's aisles and try on a dress, and they'll know the size because you already inputted it, and you'll be able to swirl around and see how you look and buy that dress online, and it'll be as if you're there. This is not that far off. So there are tools that are coming that are going to only multiply the ability to buy online and the desire to buy online. So all these things around e-commerce, and there's so many offshoots, are fascinating to me. And that's an area that we're just going to continue to focus on.
Yeah, wow, that was a great answer. There was so much there I want to unpack, but let's start with the idea of the office. What about co-working? How do you think that's coming back? I see it already coming back in my area here in Virginia. What are you seeing?
Co-working is the new normal. People are going to, we're going to move into a world where the office is going to be more transient. There's not going to be necessarily dedicated offices. You're going to see people, again, as I mentioned, even big companies who are going to say, we're going to take space in a building for only a year, but we might want to grow. So this whole world of office is going to change. And I think co-working is integral to that, really exciting. But I think the environment's going to have to be exciting. It's going to have to, be dynamic. It's got to be inviting. It has to be technology oriented. Amenities are going to be really important. If you're looking at New York City, for example, terraces, if you could do it, great restaurants, all these things are going to come into play as we think about the new office. But you're right on. I think co-working, ironically, is going to be a booming business. But what I believe is I don't think companies like WeWork are going to be that successful in this new world, because what you're going to find is that the owners of these buildings are going to sit there and say, why am I paying, WeWork effectively to go out and mark up my rents to go out and do what we can do? So what you're going to see are companies that emerge that manage these spaces for landlords, but the rent is also going to be paid right to the landlord, which will disintermediate, in my opinion, the WeWorks of the world over time.
That makes sense. I know some of the bigger developers and bigger owners have already tried to develop like a co-working brand inside their own companies to kind of attract that energy. Well, thank you so much for everything today. I feel like one of the things, just talking to you, you've obviously had a long career. You have a vision. You can spot things before they happen. As we wrap up, what advice would you give to younger investors maybe who want to learn how to develop that kind of long-range vision that you have?
It's funny because only after 30 years can you actually sit there and say, I am where I am. And I didn't start out this way. But what I've learned over the 30 years, and I teach a class at Columbia on a quarterly basis. I lecture about the future of real estate. And I tell the students, the first thing is you need to become what I call a student of change. In other words, don't take things at face value. Don't sit here and say, oh, look at that, everyone's buying things online. And that's where your thoughts end. If you really want to be trying to push the envelope, you need to be thinking about, okay, so what does that mean? And what are the ramifications of that in a profound way? What does it mean that we're going to have potentially autonomous vehicles? My thinking now is about, okay, well, what's the possibility of me waking up in the Poconos, getting in my car at 5 a.m, lying in my bed, getting delivered to Park Avenue, 2 hours and 2.5 hours later, getting up and going to the office? What's that mean? So I think the first thing has to be a hunger to think about what things mean. And then having your mind alert to these changes and programming in a manner which is always questioning. With so many changes going on, it's ripe for opportunity. But if you're not geared towards thinking about it deeper, then you're never going to get there. I don't want to keep going back to this building in Philly, but it was sitting there. The whole world knew about it, but what everyone saw was this old, rusted building with pigeons in the rafters. They didn't see that it was sitting next to 4 million people, which can be utilized to service that population. That's a good example of the way that I view the world, which is, don't look at the current world as it is. Think about the changes that are going on and try to plant yourself in the middle of that change. And that's just about being alert to this. Read everything you can. I don't care if it's Vogue magazine. I don't care if it's Wall Street Journal. I don't care what it is. You have to read as much as you can, consume as much information, and question, what does all that data mean? That's the way you become programmed to start thinking about being, someone who can actually foresee what's coming. It's not that I'm such a genius. I mean, I've made mistakes, obviously. But to me, I can see it now a million miles away. I can project ahead because I've trained my mind to try to take things out to the 10th degree. And it's just discipline and a real curiosity. I think that's kind of the ultimate skills that I would tell people.
Totally agree with that. Well, thank you so much. I feel like this was a class in and of itself.
I love it. It's really my pleasure, and I'm so happy that you gave me the chance to speak to you and your audience today.
Excellent. Well, reminder listeners, you can learn more at whartonequity.com. You can always email us at media@millionacres to share your thoughts. Stay well and stay invested.
Thank you for tuning in to the Millionacres Podcast. I hope you liked today's show. If you enjoyed this episode, please consider subscribing through your favorite podcast provider. If you have any questions, please feel free to drop us a line at help@millionacres.com. Stay well and stay invested. People on this program may have an interest in the deals, offerings, or services they discussed at Million Acres, or the Motley Fool may have a formal recommendation for or against. Always consult a certified tax professional before acting on tax advice, and do not buy or sell assets based solely on what you hear.